Hello. The company being analyzed today is Jindal Drilling Industries Limited. This is India's leading offshore oil and gas drilling company. So today we're going to analyze the company's financials, what it actually does, and its future outlook, what the company has actually said. So let's start. First, we have a market cap. The company has a market cap of 1,684 crores, so a small cap company with a current share price of 583 rupees. The book value, that is assets minus liabilities, that is the book value. Book value per share of 548 rupees is very close to current price. Return on equity is a decent-ish 14.4%. Return on capital employed is 16.3%. Stock price to earnings ratio is 7.7. Now, let's come to the financials. The company went through two phases. When you see this, these blue lines, blue blocks are quarterly sales. You can see in 2009, 2010, 2011, massive sales. Quarterly sales were reaching 300 crores, 270 crores. Okay. But then the 2010s were one of the worst, if not the worst time for the oil rigging industry. Several things happened. There was a massive oil spill, I believe, near the US, and many other things. Oil prices collapsed, and the revenues just look at this went down massively. Then, in the 2020s, there was a revival in the oil drilling industry, and you can see the company has also been revived. So, this is one risk that the 2010s happened again with the US oil boom, the shale oil boom, the oil prices going massively down, and the oil spill that happened, which I mentioned earlier, this can happen. So again, it depends very much on oil prices. So with this recent boom, with this recent revival of the company, let us look at the company's financials. So we have the revenues from fiscal year 2022, 2021 onwards. So it's 884 crores of revenues in fiscal year 2025. Nice growth from 646 crores in fiscal year 2024 and 406 crores in fiscal year 2021. Then the EBITDA. The blue line is the EBITDA, okay? 237 crores worth of EBITDA, 29% is the EBITDA margin. This was 175 crores in fiscal year 2023, 57 crores in fiscal year 2021. See a massive revival in the company. Then the profit after tax has also boomed. 17% was this year's profit after tax percentage, with it reaching 141 crores, and earnings per share has grown to 48 49 rupees from 39 last year. Now, earnings per share, we don't know if dilution of shares has been accounted for here in this statistic. If more issues were shared, has this been included in the earnings per share? We don't know. So keep that in mind. Do get that in. So with this recent revival, and we looked at the financials, let's see what the company actually does. It is India's leading offshore drilling services contractor in India's oil and gas sector. So it literally operates these things. Okay, it's not here. Okay. It owns three rigs and has rented three rigs. It is currently operating four rigs. What is a rig? A rig is the instrument, the equipment used for actually drilling the oil out of the shore. Sorry, the water, drilling the oil out of the water. Okay. And it provides some other services like mud logging and directional drilling services. These are additional services in addition to just drilling of the oil. So additional services. Then these are the rigs, these are the equipments. You got Discovery. The big one is Jindal Supreme. This is the big oil rig, the biggest one. Jindal Pioneer, Virtue One, Jindal Star, and Explorer. These were the built and the status. Three are owned and three are rented. With Jindal Supreme, the big one, and Jindal Pioneer is also very important. Okay. Now, the way they make money is that they have this rate, the day rate. So you can see the day rate for these. Look at this, $48,000 for Discovery. Jindal Supreme with a massive $88,000. Okay, Jindal Supreme is the big profitable one, very important. Then Jindal Pioneer, Virtue One, these are the day rate. So they make money on like daily drilling. They get a day rate. And these are the current order books, the money, the contracts for them. You can see Jindal Supreme has a 609 crores contract from October 24th, 2024, October 2027. You can see the duration of these contracts. These are the current contracts that they have. Like Jindal Explorer till 2028 has 318 crores. Okay. Then bifurcation of the order book. Okay, the current orders that they already have and when these orders will go. So from quarter two to quarter four of fiscal year 2026, based on current contracts, 645 crores. And then fiscal year 27, 2028, 29. Now, just because orders are not here does not mean they will not come. The company has stated again and again that once an order, a contract will run out, it will be finished, they will immediately look for new contracts. Okay. And then finally, where do they make their money from? So this was the EBITDA mix. So you can see in fiscal year 2025, of the total 216 crores of EBITDA, 237 crores of EBITDA, 216 came from rigging. Then directional drilling and mud locking, two more other services, like additional services that they provide. Okay. Finally, the company has a very comfortable balance sheet. So you can see we're going to pay attention to this. Gross debt. Gross debt as of June 2025 was 121 crores. Okay. Working capital borrowings was literally nothing. Then cash was 192 crores. Liquidity available was 233 crores. And the company has a net cash position. So company's cash and cash equivalents, you can see, are 112 crores more than the company's total gross debt. So it seems that company is very dedicated to paying off its loans, trying to actually pay off its loans. And finally, we go to the company's this. This shows the company's kind of projections. Okay, so let's read. This is said by the management. In fiscal year 2025, our revenue was 884 crores, EBITDA was 237 crores. Fiscal year 2026, we estimate that our revenues will be in excess of 925 crores and EBITDA will be between 360 and 380 crores. Going forward, fiscal year 2027, even though there are a couple of rigs getting dehired, okay, couple of rigs getting dehired. See, after every time a rig has been used, there needs to be a period of refurbishment. That is, some things need to be operated on the rig. The rig will be not operational for some time in order to make sure it's repaired, kind of repaired and worked on and bit upgraded and given a bit of a rest. Okay, a few months of rest. So it's dehired and then it's put back into operation. It's called refurbishment of the rig. So very important, fiscal year 2026, 925 crores plus a revenue, 360 to 380 crores of EBITDA. Massive increase in EBITDA. Then in fiscal year 2027, even though they will have a couple of the rigs getting dehired, not working, the revenues will be almost 900 crores in fiscal year 27, and EBITDA will again be in the range of 360 to 380 crores of fiscal year 27. This is assuming that Jindal Pioneer gets deployed at a very low rate of $40,000 per day. These are very conservative projections. Now, remember these conservative projections and Jindal Pioneer, very low rate. Let me go back here for a moment. So, if I'm correct, it should be here. Yes. See, Jindal Pioneer has a $36,500 everyday rate, the money that it makes, okay, or the money of its cost, the price every day. Now, this the company has stated again, as far as I remember, this was a one-time phenomena. These rates are exceptionally low for the industry, and it happened due to a mistake. Basically, Jindal and many other oil drilling providers once a bid for a project. Okay, if I'm correct, they bid for a drilling project, and one of the contractors made a mistake. They bid way too low. They bid way too low, causing the rates to come down extremely lowly. This was a one-time phenomena, if I'm remembering correct. And they're basically stating this won't happen again. And that for the contracts that they made after this one-time mistake, the contracts that they got, they were on a higher rate. They were on a higher rate. Though I could be wrong. Was it Jindal Pioneer or Jindal Explorer? I'm not sure actually. But but this 900 crores of revenue for fiscal year 27 and same profitability. It's a very conservative projection. Okay. I want to stress this repeatedly that these are very conservative projections based on assumption that Jindal Pioneer will be deployed in the for the next contract at $40,000 per day. I'm not saying that Jindal Pioneer will get deployed at that rate. We expect the rates to be much higher. But so that our projections are not overstated, in shape or form, we have taken a conservative view. Then, in summary, the profitability we will achieve in fiscal year 2026 will be replicated in fiscal year 2027. And if rates go up in that interim period, then profitability in fiscal year 2027 will be higher than profitability in fiscal year 2026. So this is a very conservative projection of 900 crore plus and same profitability that they have taken up. Now, what? Now, I want to find if it's for Jindal Pioneer or not. Let me see if I can find. But in the meantime, we can talk about as a summary for the business. Now, the company relies very much on the oil sector, the oil and gas sector. If prices go up, see, if prices go up, there's more demand for oil rigging. But the company is engaged very heavily with ONGC. And the thing with ONGC is they were working with another company for like oil and drilling, and they are not going to be working with that company anymore. So they are again going to come to the open market for oil and drilling services. Jindal is again the leading one. They have worked with ONGC for so many years. So it's very confident it will get those contracts. Jindal, that is, Jindal Drilling. Um, and what else? What was I saying? Yeah. One more. It's very important to remember this is a cyclical industry. There will be boom, there will be busts. ONGC is said that they need to maintain this target. All right, they need to maintain this target. They need to complete this much level of production, which they're trying this minimum level, this target level of oil and gas production. And for that, they will need to hire more rigs, more drilling rigs. So demand from ONGC, they're trying to say, is pretty stable. Yeah. Uh oh, stable and hold up. Um, let me see. Demand was more sluggish. Okay. Read this. ONGC had a little interim period of these 2 years where the demand was sluggish. We expect, and that's what the ministry also wants India to produce more and more oil. So we see this market quite bullish in the coming times, and the rig counts also coming up. So India wants to produce more. Then their cash is invested in liquid mutual funds that will give them some money, like interest payments. Then I don't see any reason for ONGC or any other company to do badly for better because India is only looking to improve its oil production. All right, India is looking to improve its oil production, so more rigs will be needed to drill more offshore oil. Then I think I can't find it. I think I made a mistake. That Jindal Pioneer's like low rate was not because of this one-time phenomenon. I think that was for Jindal, some other Jindal. I think Jindal Explorer. Okay. I can't find it. Let me see if I can find it. Okay, look at this. Like I told you, drilling will go up because they were working with BP. Yes, ONGC was working with BP right now for the last 1.5 years or the 6 months to go. They will come out with a more aggressive and better plan on how to drill. So we expect them to be more active, more demand from ONGC because they were earlier working with Bharat Petroleum. Then I can't find. Hold on. Let me see the low rates. Okay. Where can I find? Where can I find it? The video is 14 minutes. I can't find a normal thing. The international rig rate currently is upwards of between 80,000 and $90,000. Yes, the statement that last tender went off for very low price was a one-off, and we expect the rates to be better again. Okay, 80 to $90,000 are the international rates right now. Then use Concor 40,000 per days. Better rates coming up. Um, They're not working with BP again. They're not working with BP, ONGC, and ONGC is the main driver. Hold up. Okay, I can't even find it. That's incredible. So, Jindal Drilling, that is it. Comfortable balance sheet. The company has said it's very debt averse. It's trying to pay off a lot of its debt and good cash, lot of cash. Again, cyclical industry. Every time a rig is used, it needs to be refurbished, so it won't be used for a few months. And it's again oil and gas industry. That is it. Jindal Drilling. We saw the guidance given by management. 925 crores plus fiscal 2026 and 360 380 crores of EBITDA fiscal year 2026. Bye.